Hello and welcome back to another episode. In today's video, I want to talk specifically to those new investors who have joined us in the last year and even more so in the last few weeks. Because you see, over the course of 2020, there were reportedly over 20 million new retail investors. And in January 2021 alone, because of the GameStop craziness and the Robinhood fiasco, I suspect there are millions and millions more new investors who have joined us just in the last 2 weeks. And the massive surge in new investors is really no surprise. Not only 5 years ago was there a ton of friction for the average person to invest in the stock market. The first major point of friction that's been removed is platform. And I remember in 2015, E-Trade happened to be my primary platform to trade in. But think about how many platforms we have today. We have Robinhood, we have Webull, we have Fidelity, we have Vanguard, we have tons and tons of other old and new platforms that are easier to access more now than ever. The second biggest friction that was removed was the price point of playing in the stock market. And if you remember trading 5 years ago, pretty much every brokerage charged like a $5 fee to make any trade. And that was quite expensive, right? So the average person wasn't really using those platforms. But fast forward today, you have so many brokerages that offer commission-free trading. So that unlocks the price point for every single trader to trade for free. And the third big friction point that was removed is the amount of information there is today to learn about the stock market, the amount of communication you can have with people. And those three things combined lead to the biggest investor market we've ever had, with more and more of those investors being everyday average people. And take it from me, someone who's been passively investing for well over a decade and more actively investing in the last 4 years, I've learned quite a lot that I want to share with you. And if you're brand new to investing in the stock market and all you've had so far are bad and negative experiences, this advice is really for you. This first lesson you really need to understand. So in order to build wealth, you have to learn to invest. Because no matter how much you earn, no matter how hard you work, if you're not able to invest that money wisely, that money will never grow to the point that it can work for you. And the second big lesson that I hope you've heard before is that you should only invest the amount of money that you can live without. So what that means is that if you have other bills and debts and living expenses to pay first, take care of that first, invest later. Don't use money that you need to live your life to invest in the stock market. That just doesn't make sense. And once you have enough extra money that you would have wasted anyway, use that money to save and invest instead. And along the same lines of investing what you can afford, you also need to understand what your risk tolerance is, which means you need to understand how much money you want to put in the line for a specific, potentially higher reward. The third lesson is that you really need to take the time and learn the basics of the stock market. And there's no real reason not to learn this information, especially when there's tons of free content out there, including this channel. So please follow and subscribe, and I promise to answer your questions every single step of the way. So the fourth lesson is that you need to do your analysis, at least to some level. And oftentimes this is called doing your due diligence. But at the essence, what this means is that you at least have some understanding of what you're investing in, whether that's the fundamental analysis of the company's mission, whether that's the technical analysis of the company's numbers, and even the social analysis, which is understanding the community and the media sentiment around the investment. And I think Warren Buffett said this, but he said to invest within your circle of competence, which really means that you need to understand what you're investing in and not just putting your money into a black box. And the fifth and final lesson of this video, which I think a lot of us might have learned the hard way in the past week, but really it's about slow and steady wins the race. Automating and investing in the stock market should be a very boring thing, but if you find yourself getting too excited about the stock market, you're either becoming a day trader or your portfolio is too high risk for your anxiety level. It's the classic story of the tortoise and the hare, and hopefully you guys remember who won that race. Ultimately, one of the main purposes of investing is to ensure that the money you have today will work for you and reach a level that you want well in the future. I don't know about you guys, I'm sure it must feel nice to get rich real quick, but for me, I'd rather get wealthy for sure. So for those brand new investors watching this video, I want you to do one action item. And for those of you who want to open a new account, check out my Webull link down below and we both get free stocks. This is what I want you to do. 1, stop buying meme stocks. And 2, take whatever money you have left and put that into a broad-based index fund. And remember lesson number 1, to invest only what you can afford to invest. And the one I would recommend you to start with is an ETF called VOO, which is covering the entire S&P 500. I want you to park your money in there, watch it grow for a month or two, just so you understand the very, very basics of what the stock market is doing with your money. Hey, if this video was helpful for you, please help me out and give this video a like. And if you have any questions or just want to talk about this, please leave me some comments down below. And if you want to see more weekly videos where I'll be glad to help you get smarter with your money, definitely consider subscribing. And as always, Thanks for watching. See you next time.